So go ahead and, all right. All right, it's 6:15. We'll call this meeting to order. Is everybody taking a chance to look over our minutes from our last meeting? If so, do I hear a motion?
I'll make a motion to approve the minutes.
All right, got a motion to have a second.
Second.
All right, all in favor? I'm going to turn it over to Janet and let her introduce our newest member to the. All right. You can introduce both of them.
Okay, so we have a new Main Street Tourism Coordinator, Shannon Grogan. Hey, Shannon. She'll be keeping me and Miss Sharon in line. Is Ron doing number one on the, or y'all got to go through the other stuff first, right?
Do what now?
Are we doing a financial report?
We can.
And then
Financial
Ron
report,
from
and then-
Ron Johnson is
Yep.
our planning and zoning specialist,
Right.
and he's here tonight.
All
All
right.
right. The financial report's nothing to it. There's just about $10 worth of interest on the account for the last month, so that's the only activity.
Any question from Carl? All right, Janet, now do you want to introduce them? We're at that point now.
So are we having Ron doing the discussion on benefits of remodeling downtown buildings? Is that what we're having?
That's Bill's, isn't it?
Bill? Is that what you're doing? Okay. So Ron Johnson, come to the mic.
Thank you. Good evening, everybody. Thanks for having me tonight. My name is Ron Johnson, as Janet said. I'm the planning and zoning specialist for the city, so I handle the board applications that go before the city council and the planning commission, as well as the HPC for certificates of appropriateness. I have a short PowerPoint for you guys to try to go over some of the tax credit programs that are available to us. Some of them are unique to programs that we had to apply for and be granted from the state, DCA programs, et cetera.
Reflection of the light and glare, yeah. There's Ellie.
PowerPoint file you want to present. Start with one of the Zoom meetings, click share screen, and the meeting can start. Select the primary line, present, click share. So we're going to open the PowerPoint file you want to present, because that's open. Start with one of the Zoom meetings, click share screen, and the meeting can start.
Down at the bottom of that screen, there's a green share the screen.
And then select your primary monitor, and then click share. There we go, hit share. At the bottom right. All right, can y'all see it? Can they see it? We're good, yeah?
All right, thank you very much. You know, you'd think the millennial in the room would get that, huh? But I guess not. All right, so if you could just make that full screen for me, Janet, if you don't mind. Oh, yeah, go up to slideshow at the top. And from beginning, all the way on the left. There you go. I wish I had a clicker. I had the clicker. I know, I forgot about the clicker. All right, so you can go ahead to the next screen. All right. So there's a number of different types of incentives. I guess the goal really of this presentation is to just educate everybody. This was an education for even myself on the sheer number of tax credits and loans and grants that we either administer or are administered by the state that we could take advantage of. So I tried to include as many of these credits as possible. I just listed the 3 here. That are probably the most pertinent to us and ones that would more than likely be utilized by a business that would like to relocate to Villa Rica. And you can go to the next one. I need a signal. That symbol. All right, so I'm just going to kind of run through really quick the grants that you guys are probably really probably pretty familiar with these grants already, but the first grant here is the Boost Grant. These are really geared towards small businesses, and they're micro grants, so $100 to $1,000. It's for financial assistance to any business, and it's not a match that's required. And the grants are dispersed on a quarterly basis, from what I understand. So this is a grant that is utilized, as you know. The Main Street utilizes it and gives it out all throughout the year. Next.
Got a question. Does the size of the grant, is that dependent upon the size of the project, or, you know, what determines 100 or 1,000?
Well, it's max of 1,000.
Right.
So if you have like we just did Uppercut Salon last year, their awnings, and they were like $986. So we gave whoever her contract was $986.
On the mic. Sorry.
So basically, if the cost of the contract, whatever that happens to be, is over $1,000, you would try to give them $1,000 max grant. Is that
Correct.
what I'm hearing?
Correct.
Okay.
You can go to the next one. You can go ahead. Next one. Oh, there you go. No, I got it. The facade grant program, another one that's administered through the Main Street, that's up to $5,000.
This is actually DDA. This is
Oh,
actually
I'm
done
sorry.
through DDA.
DDA,
Yep.
I apologize. Through DDA, and it provides up to $5,000 in grants for exterior improvements to the property. So it can be taken by the tenant of the building or a property owner, and it's a way to help us improve the buildings as we have them now, because I do understand that there have been people who have been interested in this grant in the past. I'm not sure how many you guys have issued or not.
So we did one for Amy Brown State Farms office, and we
Yes.
did one for Southern Homes and Land Realty.
Security finance too, didn't we?
So the
I don't know about security finance. I can't remember if we did that one or not. I don't think so.
So they would have to go through the Historic Preservation Commission if it's something that's inside of a district right now, which we'll go over that as well. I have the district maps in here. For this one, there's of course the one-for-one match. The next is the EIG program, Exterior Improvement Grant, which is similar to the last one, but the maximum grant award is $2,500, and there's no cash match.
Again, what determines the amount, the size of the project?
Yes.
All right, so those are the only 3 grants that we actually administer here that I'm aware of. Now, as far as loans are concerned, there's 2 different types of loans as well. Both of them seem to be almost identical to one another. So we have the Georgia Cities Foundation revolving loan fund. That's a $250,000 maximum.
Ooh.
Oh.
Sorry, guys. There we go. Sorry.
Okay. And the repayment period is 10 years, but not to exceed 15 years. I'm not sure what that 5-year change or why that would be, but typically they're 10 years.
Yeah, we've never administered one of these. Or had-
Probably
we
an
have.
amortization
Yes, we have.
to 15.
We have.
Which one is it?
The,
Who?
the one where Andy works in that building.
Oh, okay.
We did that,
Which one is that one?
gosh, it's been
Tom Larkin.
15 years ago.
Before my time.
Yeah, oh, yeah, way before your time.
So the ineligible projects, real estate acquisitions, building rehabs, new construction, green space, parks, etc., can be utilized for this. So typically, it will be a municipality that will be applying for it, but also businesses as well, right? Yep.
Correct.
So you can go to the next.
Before you go on, Ron, excuse me, the way that works, for those who weren't here when we did it, it's a 40-40-20 loan. If the developer or the buyer of the property can wind up with 20% of the cost involved in it, then a bank will take first position at 40%, and the Georgia Cities Foundation will take 40% in a second position. So it's really a no-brainer for a bank to go this route, because they only have a 40% investment in it,
Right.
but have the first position if something goes wrong. So the state actually takes the biggest risk right here. The developer a 20% risk, the bank a 40%, and then the state 40%. But that's a second position for them.
Okay. Got it.
All right, so the last loan here is the Georgia Department of Community Affairs Downtown Development Revolving Loan Fund. This is almost identical completely to the other loan fund. I'm not really sure why they would have two of the same exact programs, but when looking at the criteria for the two, they were identical. So, I mean,
I can explain that too.
okay.
Go ahead.
They work together, hand in hand. Either one does it or the other does it, but they don't do them simultaneously.
Okay. So then, technically, someone can't come in and apply for both of those loans because
Correct.
there will be a second and first lien holder positions that each of these individual loans would have to take, or is it just that you can't utilize one if there's another?
I actually dealt with both of them when we did this one over here, and they will tell you that we work together, and if we have money, we'll be happy to work with you. If they have money, then you're going to have to go see them, because they have revolving loan funds themselves, and if it hasn't been repaid in a timely manner, then their resources dry up too. So that's the way they do that.
Okay.
Yeah.
So now we're going to get into our historic, or into all of our tax credit programs that are available to us, and there are quite the number. I was telling Janet just before this that I never would have imagined that there was the sheer number of tax credits as I thought. We always hear about housing tax credits, we always hear about historic tax credits, but there's far more than that in Georgia. And some of them overlap each other. Some of them can be utilized together, but the state has so many different rules on the utilization and combination of these different tax credits that it truly is up to each individual situation. But the first one that I want to go over is the state historic tax credits. That's not to be confused with the federal historic tax credits. State tax credits for historic properties, they would have to be either on the national or the state register of historic places, or it would have to be eligible to be on it. So we went through like a pre-application process, for example, through the state SHPO office for a district or potential listing of a building, that will qualify if they come back positive on a recommendation to move forward with a district, for example. But any building that is to be renovated under a historic tax credit from the state would have to follow the Secretary of Interior standards, the federal standards anyway, which is the same with our historic or our Historic Preservation Commission here, they also follow the Secretary of Interior standards through our new design guidelines that were enacted last year. So they're pretty much the same. So with the historic tax credits, another thing is the project also has to be, you can't utilize this tax credit, for example, with certain other tax credits. The federal one is the most restrictive one, which we're going to go over the federal one next. But that one, for example, you can't utilize with the rural zone program, for example. But for state historic tax credits, you can. So if someone wants to approach us, they want to buy a building, they want to utilize the rural zone, we can also tell them to check out the state historic tax credits as well. You can go to the next one.
Is there a percent associated with these taxes? Like a project overall had, say, $500,000 value. Is there a percent of that as tax credit?
Well, on this screen, we'll
I'm
be able
sorry.
to see here the types of state historic tax credits. So there's two. There's the state preferential property tax assessment for rehabilitated historic properties, which would freeze the county property tax assessment for a total of 8 years, and the owner must increase the fair market value of the building by 50 to 100%. And that depends on the different uses. They have a whole number of different uses for commercial that it would have to go off of. And then there's the second one, which is the state income tax credit for rehab historic properties. And that is the one that you hear about a lot that people actually take. Obviously, the freezing of the taxes is great as well, but a lot of people have hurdles with increasing value up to 50 to 100% as well. So if the building's not completely bombed out and it actually has a use that's there now and it's utilized and it's kept up, but someone wants to make additional changes to the interior of the building to increase value, the chances of that getting over 50 to 100% is really low. So the second one here, if you could see, it says the Georgia State Income Tax Credit Program for Rehab Historic Properties allows eligible participants to apply for a state income tax credit equaling 25% of qualifying rehab expenses, capped at $100,000. For personal residences, and $300,000, $5 million, or $10 million for all other properties. So that would depend on if it's industrial property, if it's a commercial property, the type of commercial property that it is, size of the building. They have a whole laundry list of criteria. You can go ahead. So this is the eligible area for this for these state tax credits. It's only on the north side of the downtown area, because the south side is not designated at all right now. It's not designated local, state, or national. And the north side, as I actually kind of alluded to on the phone with Bill Taylor last week, the north side, it was designated in 2002. On the national and the state registry, but I can't find any documentation for a local designation. So we would have to correct that by doing an entire new local designation for that area. And keep in mind that's very important, because a local designation is what empowers and enacts a certificate of appropriateness process. So you can kind of see where I'm going with this, that if we don't have a local district, but we have a state and a federal, then how can we continue with the certificate of appropriateness process? So
What do you need there, Ronald? I contacted the lady that did most of the legwork for this. She thinks she can find it in the files of her business. Do you need that type of documentation, or
if we have it, that would save a lot of time
Yeah, I'm sure it
and
would.
a lot of confusion into our process. And I would please encourage you to try to help me get that if it is out there. I looked back through some agendas. I didn't see anything for local, but I couldn't go all the way back to 2002. And there's nothing on our file systems for that. So if it may very well be there, but it's just, I don't have it. So if it doesn't show its face within, the next several months, then I'm gonna have to go to city council and designate it again locally. But the national and the state still stands though. So as far as I'm concerned, can you utilize federal or state tax credits programs? Yes, you can. Can you layer them? Yes, you can. You could see actually on the screen here the two different types of federal tax credits. One is actually for buildings that are eligible to be or listed rather on the National Register of Historic Places, the National Register. Now that's a higher credit. That's going to be for 20% of rehab costs. But the second one is 10%, is a 10% credit, and that's for buildings that are considered non-historic or complementary to the district that's surrounding it. So if I have a 60s ranch that's in the middle of a historic district, then I would still be eligible for a 10% tax credit, even though my building doesn't contribute to the district itself. It's a non-contributing property.
So virtually all the buildings on the north side of the track, from here down to North Avenue.
North Avenue. Mm-hmm.
Are within this district.
They are, yes.
Yeah.
Mm-hmm.
Yeah, the reason we did that back in 2002 was to get what is now the loft apartments in a position to where it made it financially feasible to do that.
Mm-hmm.
And so there have been other rehabs done up and down through there that took advantage of that too, but not to the extent that those loft apartments were. If a building downtown
Mm-hmm.
that is, say, in no use or misuse, whichever one you would say, and it needs a new roof, it needs new floors, it needs new plumbing, it needs new wiring to bring it all up to code, it wouldn't take it long to double the cost or the value of it. Now that value, is that the value in the tax books right now, or is that value what somebody pays for it when they buy it to rehab it?
Specifically with which tax credit though? With
Well, you said it had to up the value by what, 50 to 100%?
yes, state. Can you go back to that one? For state, yes, and that's the value. Let me take a look.
More.
I think it's one more. Yeah. Oh, there we go. Yeah, it's fair market value. Mhm.
50 to 100%.
Mhm.
Now, is that using the tax value on the county records? Or is that the amount one would have to pay for it to buy it?
I'll have to find out, but my first gut thought here is when they indicate fair market value, I believe that's what the assessor uses, right? Fair market value. So that's so I guess to answer your question would be yes. They would utilize the fair market value of the property as indicated by the assessor.
Okay,
Yeah.
from the tax records itself.
Mm-hmm.
And if somebody could buy it at that price, whatever that price happened to be, and then spend that much more on it to bring it up to standards, then he would certainly meet that 50 to 100%.
They can, yeah.
Okay, would the value then be from the tax assessor or from his personal financial records of what he had to spend on it?
Well, the assessor takes, oh, I'm sorry, for what he had to spend as far as not just the acquisition, you're saying?
Right.
I'll have to find out. I'm hesitant to say one way or the other with that. That's a tax. Mind you, being that these are two different types of state tax credits, that tax credit, the first one, is one that I don't believe that I've seen or ever had to deal with here. I can't think of one property that has had to ever apply for that or anything. Just the second one is the one that you see most of the time. So I'll have to find that out and let you know. It's a good question though.
Okay,
But they only indicate fair market value on almost any of the state paperwork. They don't say how they reached that or anything, so
Okay.
it's an intricate question.
okay, the rehab expense is capped at $100,000 for personal residence, 305 million or 10 million for all other properties. How is it capped at 3 different levels for all of the properties?
Well, first there's qualifying rehab expenses in general and what that means. And based on the type of property that it is, that would fluctuate, right? It would be different from a personal residence than a commercial building. There's many different types of commercial buildings. So it really depends on, they have a whole, like I was saying before, they have a whole list of criteria for people to follow and where their buildings fall into. So for commercial properties, it really ranges on the square footage. It ranges on the how many business or uses are actually in the building. How many apartments? If there's like multiple apartments in the building, if there's multiple storefronts in the building, all of that comes into play. So it can vastly range. It's not like one set for everyone.
Sounds like if anybody was interested in doing this, they would have to go to Carl down here to get his tax opinion on it.
No, go to Ron, not me.
So
No, but
it is not straightforward, is it?
No, unfortunately, you're going to see as we go on, it's not really straightforward for a lot of these, unfortunately, and which ones of these can be combined with others. I tried looking to see, does it matter, for example, if someone wants to go and get a job tax credit in addition to a state historic tax credit, for example. One is obviously dealing with people, and the other one is dealing with structures. And the answer is yes, you can do that, for example. But when it comes to rural zone, it becomes a lot less clear on the different types that you can and cannot combine with them because they do overlap. There is a job tax credit program under the rural zone, but then there's multiple different ones for the state as well. And which ones can be combined? Does it make sense to combine them? Can you just keep layering them up over the same employee that you hired? And it doesn't appear that you can do that, but I can't find it anywhere in any of the state's paperwork. So I actually already sent an email out to Sherry Bennett to find out. So you can go to the third one.
Well, we weren't really talking about the number of people that would be hired for a rehab. We're just talking about the cost of rehabbing and making it suitable for a commercial or a residential location.
Mm-hmm.
And usually those are associated with industrial locations, aren't they? The number of people that are going to be hired over the next 5 years.
It can be, but the state also has telecommunications industries, anything that's considered like a vital technology-related use. It doesn't necessarily have to be industrial in nature. It could be office-related as well.
Okay, so you would be certainly willing to work with somebody if they were interested in doing this?
For historic tax credits?
Yeah.
Yeah, absolutely.
Plus all of the grants that may be available, every incentive that's out there, you'd be willing to work with somebody to maximize.
To find the answers and to
maximize it.
Yeah.
So, okay. All right.
Janet and I are kind of we call ourselves a dream team, so.
Yeah, so Ron and I are the dream team on Rural Zone. Of course, I oversee the exterior improvement grant through Main Street and the Boost grant through Main Street. You guys handle facade. So we will work for you, and then Ron and I work with you guys on the Rural Zone portion of it. But anything to do with historic preservation, I'm going to leave that in Ron's hands.
Yeah, I don't want to step on Janet's toes too, because I know she administers a lot of these programs already. But when it comes to state and federal tax credits, that's something that we don't actually administer through the Main Street office. We don't administer really at all. It's up to the individual person to find out. But I would, of course, to move the goal forward, I would want to work with somebody who's coming in to try to make sure that they maximize everything that they can get.
Okay, so as far as grants are concerned, just pure grants, the max would be 5 from the DDA, 1,000 from Main Street.
1,000 for the boost grant. The exterior improvement is a max of 2,500.
Okay, so that'd be $8,500 in grants we're talking about here. Am I correct? in
Correct.
that?
The Main Street Board will ultimately vote. I don't know that we would, give all three to the same, but certainly that's up to, I'll let Carl speak to
Yeah,
that
and
because you're the Main
the
Street Board.
boost grant and the exterior improvement grant are really for two different things. The
Right.
boost grant's mainly for
Interior.
interior equipment, things to improve the business, whereas the exterior improvement grant's for the outside, similar to the DDA's facade grant. So a lot of times the Main Street exterior improvement grant will be put together with the DDA facade grant to do the outside.
Correct.
So those two would go together for $7,500. But then the $1,000 boost grant is really for other things, like equipment and inside of the store.
Because I believe Amy
But it could
Brown's
apply.
building, yeah, could apply. Amy Brown's building, I think in Southern Homes Land Realty, we combined both of those, I think.
The exterior improvement grant and the DDA.
facade.
Yep.
Correct.
Yep, we did.
Okay. I think we're back one.
Back one?
Okay. Back one more. Gosh, one more. Okay, there you go. All right, so separating out the 20% grant for a moment, or 20% tax credit rather, and one thing is it's important to note that any expenditure that's incurred by the taxpayer before the start of the 24-month period will increase the original adjusted basis. So during this 24-month period, to where the property is substantially rehabbed, the rehab expenditures have to exceed the greater of the adjusted basis of the building. So, and its structural components of $5,000. The basis of the land is not taken into consideration. So they're only looking, I guess that kind of answers your question, your initial question about fair market value or fair value of the property. They're not taking into account the land value. They're taking into account the building value and the increase to the building's itself's value. So to put it simply, it appears that it would be the tax assessor's numbers that they're going off of then. That's the only thing they can go off of.
Yeah, so all of our tax bills that we get every year has a land value and then the building value separate on that.
That's right.
And just, let me throw my accounting hat on here, because the terms that you're interchanging two terms that don't mean the same thing.
Uh-oh.
Value and basis, two different things. A basis is what they paid for the property. So if they're looking at adjusted basis, that's what they paid for the property plus improvements that they've made, the actual cost of the improvements, not the fair market value.
Oh, okay. I see.
So,
Yeah, I was
by
using them
using
interchangeably,
those
yeah.
terms, that's saying basis, so that's whatever they paid for the property.
For the entire property, Carl, or?
Well, it says taking out the land, so,
Okay.
so whatever they paid for the entire thing, you would have to allocate some to the land and some to the building, and whatever is allocated to the building would be the cost basis.
Which you could do with your tax statement.
Yep.
Okay.
Okay.
So if the rehab is completed in phases, the same rules will apply, except that instead of a 24-month period, there's a 60-month period that's substituted. And the phasing rule is available only if the taxpayer meets 3 conditions. There's a written set of architectural plans and specs for all phases of the rehab. The written plans must be completed before the physical work on the rehab begins, and it can be reasonably expected that all phases of the rehab will be completed. And third, the property must be placed in service. So the rehab credit is generally allowed in the taxable year the rehab property is placed into service, provided that the building has met the qualified rehabilitated building requirements for the 24-month period ending in that taxable year. A qualified rehab building is defined as that which has been substantially rehabbed and was placed in service as a building before the beginning of the rehab, as opposed to a ship, airplane, bridge, etc. Go ahead.
Now,
You
the
go to next
credit,
one.
I want to make sure that I understand that word, credit. Carl, is this a reduction in income taxes or property taxes or what? Exactly what is this particular credit, you think?
That's a good question. It's, the tax credits, against, a credit against what, Ron?
You can go back to it was just on the,
Was it on a prior slide? I just missed it.
yeah, keep going. I'll tell you when to stop. All right. Nope, cool. Other way. One more.
Yep.
Yeah, just the one with the picture of berries. So for historic tax credits from the federal level, that's going to be taken off of your tax liability.
Okay, so it's a
Yeah, that's your
federal,
tax
so it's
liability.
an income tax credit.
So it is
It is-
a credit against taxes owed.
Yeah, so it's an
Against
income
taxes
tax
owed,
credit.
yes.
So, and I'm assuming with the flow-through entity, it would flow through to the owners. So if it's like an S corporation, since they don't pay tax, typically those credits flow through to the owners. So you take it on, if you owned an S corp and you got this tax, you would take it on your personal tax return.
Okay. And that is taken in 1 year, correct? It's a 1 year shot to get the 20%.
Yep.
You can keep going.
Some of them will allow carryover,
There you
but I
go.
don't know about this one.
Yeah, this is one.
Okay, I just saw a 1936 date in there. What was that? Back
Oh,
up just a little bit here.
You can back up one. The 1936 date was one more. I'm sorry. No, keep going. Keep going back. There you go.
Right there.
Yeah, so that's for the non-contributing properties. That's for if the property was built before 1936 but is not a contributing property in the district, then they can still claim a tax credit. It'll be 10% though. It wouldn't be the 20%.
Okay, when that comes to the south side of the track, that will come into play.
It will,
probably.
yes.
Yeah.
It would, because there's so many buildings that are non-contributing over there. Some have like stuccoed fronts, and other changes to it, which we don't even 100% know which ones will be considered non-contributing by the state and federal government yet. We have a survey of our historic resources that indicates some of them are non-contributing. However, we've had some issues with that survey in the past, so I'm not 100% sure if that's here to stay or not. But we're going to be getting an official opinion anyway from the state by the end of the year. All right, sorry, Janet. You've been a trooper. Thank you. This is it. Yeah.
My personal recollection is the only buildings downtown from South Carroll down to what's the last street going down by Jones Wind? What's that street? Anyway, there's only 2 buildings that have been dramatically, physically altered. Now, some of them have been covered up with stucco and with rock, but only the building where Chat and Chew is. No, the building where the hospice is has also been radically altered. And then down there where Tim McCreary's office is, that used to be the bank building, which has
Right.
been altered. I think the rest of them, other than stucco and crazy, that's it.
Yeah, a lot of them, and the criteria that they're using is any changes to the exterior from at least 50 years ago. So, which is what's going to designate or indicate if something can even be designated as historic or not. So, for example, stucco, windows and doors, facades, roofing, even in some cases, flashing, all those things add up to, depending on the number of changes or how significant those changes have been, that can easily add up to a property being a non-contributing property to a district. So the more non-contributing properties that you have, In my experiences, at least, the lower your chances are to actually getting on a register at all. So they don't want to designate a whole bunch of properties, 10 properties, and 9 of them are non-contributing properties. So it's going to be a definitely uphill battle for the south side of the district, but the north side, as you could tell, most of it has stayed intact. So you guys didn't have that issue back in 2002 on this side.
Didn't you tell me that it can be done building by building rather than block by block, though?
It definitely can, and I don't recommend it. Besides the fact that it would run at an absolute snail's pace to get all of the buildings to be designated, that just the sheer time to do that could take years, especially with so many small properties over there. However, the goal really should be, and especially for any grants that would come down the line, just thinking strategically, having one unified and uniform district that you can refer to instead of a scattered amount of properties that were designated can help you tremendously on any grant application when it comes to anything historic or improvement on anything that is historic. So if you can draw a common history between buildings and a common location, a common place, common people, all of that strengthens a district. So when it comes to specific grant applications or nominations or what have you, it's much easier to apply if all of them are designated versus just if we're going one by one, piece by piece, all the way down the street. It's not efficient, it's not effective.
Well, it's been 18 years since we did this over here.
You're right, and if they, let's say, and I'm just gaming this out for a moment, if they come back and say that the South Side Historic District has been too compromised and that it can't be a singular district, it's too many non-contributing properties, and the overall sense of place has changed, we can definitely turn to that, and we can go building by the ones that are not considered non-contributing properties. Yes, we can do that. We could still go forward with a local historic district as well, which will accomplish our goals anyway, but it wouldn't open the property up to any state or national tax credits, federal tax credits for historic properties if it's only on a local designation or a local grouping of properties. If it doesn't have the state or the federal if it's not on the historic registries, then you're going to miss out on all of those tax credit programs. You can't apply them. So that's why it's really important that we get that South Side on the state or national.
Probably the oldest building in town is Jerry Doyle's store.
Yes. Mm-hmm. That's one to be designated.
It was a buggy shop back in the 1800s.
Mm-hmm. That's one that's supposed to be designated. We have old pictures of it. That's one of my Historic Preservation Commission members was able to find. So where that's actually going to be a part of that district. That's the only building on West Wilson Street that's proposed to be a part of that district.
And what is the year cutoff again? 1936 is a cutoff year for this?
No. For designation, you're saying?
Yeah.
For designation, it's 50. The property has to be at least 50 years old.
Well, several on the back street are over 50.
Yes, some of them are, but they've been so heavily altered, or there's no historic photos, there's no historic documentation. There's nothing that, just because something is old, that it doesn't necessarily mean that it's historic either. There has to be something that's unique.
It's not like me. You can just look at me, right?
Well, I won't comment on that, but I guess that's really a way to kind of curb some of the applications that I'm sure the federal government gets 1 million applications, and half of them are probably not even have any historical nature to them. So,
Okay. Can I get a handout of all of this stuff from you?
yes.
Okay.
I'll send it to your email. I'll actually send it to all of you, your emails.
Okay.
So we're going to move on to the 10% federal historic tax credit. So if a building is not listed in the National Register, which is, this is actually just what Bill was just referring to, is not located in a registered historic district, but it has been determined to be a non-contributing property by the Department of the Interior, then a 10% rehab tax credit may be utilized provided that the building was placed in service before 1936, is used for non-residential rental purposes, has not been physically moved after 1936, and meets the following internal and external wall retention. So 50% or more of the existing external walls are retained in place as external walls. 75% or more of the existing external walls are retained in place as internal or external walls, or 75% or more of the existing internal structure framework is retained in place. So you can't just knock it down and build it back, basically. And I can't refer to any specific property, but we have this situation now in town. And so I don't know what I can and can't say. But what I will say is we have this situation now. We have a building that's practically collapsing on itself. And it was built before 1936, but it was moved in town. The building was moved to the south side of the tracks from way up near Fullerville, and it wouldn't qualify for anything else other than these 10% this 10% tax credit because it's not contributing to the block that's surrounding it. Even if the South Side Historic District was designated, it still wouldn't be contributing to it. And it was built obviously before 1936, and it was moved, so the 10% tax credit is something that the owner can take if they would be willing to do a rehab project there.
If that's the building I'm thinking about, it's at least 100 years older than 1936.
Right. All right, so this is the eligibility map again for the federal tax credits. It's the same as the state because this district is on the state and federal Register of Historic Places. Rural zone. So with the rural zone program, and I apologize, I actually misspoke earlier in the beginning of the presentation when I said that rural zone can't be combined with state historic tax credits. I apologize, it should have been federal. Federal and rural zone can go together, but the state one, it can't go with. That's what I should have said. So state and rural zone, you can't double up on them. Georgia basically says you have to pick one or the other, and it's up to each individual business. It's up to each individual property owner on which one is more beneficial to them, state historic tax credits or rural zone program. And that's going to be different for everyone based on their level of investment, really. So, and we'll see that through here. You can see on the bottom here the 3 different tax credits that fall under the rural zone program. So there's the job tax credit, which offers $2,000 per new full-time equivalent job created. There has to be a minimum of 2 jobs created for that in order to claim the credit. This lasts for 5 years. It started back in 2020, by the way, in the beginning, January 1st, and it's going to go all the way to December 31st, 2024. The investment credit is equivalent to 25% of the purchase price of the building, and the rehab credit, which is equivalent to 30% of the qualified rehab costs. Both of those two on the bottom can be layered together. I believe all of them can be layered together, right? Yeah, all of them can be layered together. So if, for example, I'm someone who's interested in investing downtown Villa Rica, I come into town, I purchase a building, and I'm going to claim the investment tax credit. Then I want to rehab the building. I can claim the rehab tax credit as well. I'm rehabbing it for a reason, for a store to move in on the bottom floor. Let's say I have apartments above or what have you. As long as that store is going to be creating jobs. So that's the job tax credit. So the job tax credit can also be claimed by the business that's going to be moving in as well. So, but there has to be a job on all of these for the rural zone program. There has to be some type of a job creation aspect to it, and that minimum is 2. full-time equivalent jobs. So if I have 4 part-timers, that would add up to 2 full-time positions, for example.
And you have to maintain that for 5 years. If you don't, they're not going to take the credit back from you from the previous year, but moving forward, you will not receive the credit.
And if the credit is more than what your liability is off of your taxes, then you can't, it's not cash back in your pocket or anything like that. It just goes away from there. You've utilized all of it.
Okay, in a real-world example.
Sure.
Ron, here, 25% of the purchase price of the building. Now, that is building plus the property right there, correct? It's, what did you
Bill, can
pay?
you,
Speaking of the-
talking to the mic? Sorry,
I'm sorry.
we can't hear you.
I'm not accustomed to this. If somebody pays, say, $100,000 for a piece of property with an old building on it, so the first year, he can take a 25% on it?
It's going to be carried through the entirety of the 5 years. It's not
Okay.
a one-shot the first year.
Okay, so,
They space it out.
so it's prorated over 5 years?
That's correct, yes.
Okay. So when the rehab is completed, does the 5 years start all over again? Because you may buy something and not start to rehab it until, 18 months, 2 years down the road. And then it may take another 2 years to get it rehabbed.
Well, as long as you purchase the building after January 1st of 2020, then you can apply those tax credits to even future income tax liability as well. If you don't take, for example, if you're gonna owe, if you know you're gonna owe taxes in the next year or 2 years or 3 years down the line, and you're in the middle of a rehab project, you can continue to take this credit and apply it. You just have to go through Janet's office, and you can continue to apply it going forward as well, as long as you're going to get it for the entirety of the 5 years.
So the Rural Zone application is done through my office, but the Department of Community Affairs is actually the ones that approve it.
But is that 5 years, is it a rolling 5 years? Like
Yes,
5
yeah.
years start at?
Yes and no.
Yes and no. I know nothing is simple.
I love answers like that.
Yes, it is rolling in a sense, because if you come in after, let's say you come in 2023, for example, there's only about 2 years left on the program. They're going to continue it to 2 additional years beyond just the 2024 date for people who are coming in late for it. You're not just X'd out of it because you didn't come in 2020 or 2021. You're still going to be capable of applying for that credit and getting it and having it for even 2 years beyond when the municipality is designated as a rural zone.
So
That's going to be the cutoff, though.
this law has an expiration date to it, basically.
Correct.
But it can possibly be extended, like all laws can possibly be extended.
Like
Well-
Ron said, if you started in 2023 and you just started the rehab then, they'll give you a few more years because they understand that you're coming in on the tail end of it.
Yeah.
Yeah, and there's a difference between the law being expanded or extended and the designation itself. No communities so far, I believe there's like 23 or so that have been designated, and none of these communities have, even the first ones that have been admitted to this program, none of them have had an extension. So I think this is really a one and done. And on top of that, we wouldn't be eligible for an extension anyway because our population is now over the threshold.
You had to be 15,000 and under to even be qualified. So we were right at 15. I think we were like 20 people short of being at 15,000 when we applied for it.
So we are still in the game up until 2024?
Correct.
Okay. Okay.
Just because our population goes over 15,000 is not going to kick us out of the program or anything.
Yeah.
All right. Okay, so like I said, it's dependent on the creation of at least 2 new full-time equivalent jobs. It can't be combined with federal historic tax credits, but it can be. That's very odd. That should be reversed. That's not correct. It actually, I apologize, I had them reversed again. These two historic tax credits have me confused half the time. So it actually should read that the federal historic tax credit can be taken. It's the state historic tax credit that cannot be taken with rural zone. State, because they're two state programs, just think of it that way. And you can't layer them both together. It should, and I'll correct that. But it is, you can use it with federal historic tax credits, absolutely. So we talked a little bit about the criteria of what we had to go through to get the rural zone program. So we had to have a population less than 15,000, a core downtown area with structures older than 50 years. We have that. Evidence of blight or disinvestment in the downtown area. We had that. Implementation of a strategic plan in the downtown area. We had that with the RSVP plan that was commissioned, I believe, in 2018, 17? 16. Ooh. Oh boy. All right. And a completed market analysis, which indicates gaps with the local business makeup, which we also had that as well. We also were able to commission that. Go ahead.
When
All
did we
right.
do that, Janet?
When do we do what? The
Last one
RSVP?
up here.
Oh,
What was the last?
the rural zone itself?
No, which indicate gaps in the local business makeup.
Late 2019, it was completed.
Okay.
Thanks. All right, so this is the rural zone map. And so as you can see, it includes our main historical buildings on both sides of the rail, but also it extends down to the Don Rich Ford block as well. That was kind of a testy thing for us because we thought they were just going to throw that part out because it's kind of far away from the center of the downtown and it's not as many historic structures on that block as you can imagine. But they gave it to us. They really cautioned us and were very clear in their original presentation about rural zone when we inquired that they do not want large expanses of areas that are not in the core historic area. And we, of course, went ahead
Got
with it
lucky.
anyway, and we got lucky. So
They
being,
typically only give maybe half of that, and so we got quite a bit.
but
lucky.
that block is important and I think it's worth the time to spend on it because obviously there's large parcels of land or at least much larger than we have downtown, and they can all be consolidated into one large project if that's something that presents itself at some point in the future. So that inclusion of that would be huge, and someone can easily reap the benefits of the rural zone program on a section of town like that. Okay, so outside of rural zone, there's other job tax credit programs, and again, like I said, when it comes to these job tax programs, and basically almost all of the programs that you're going to see after this that are tax credits, how they work with rural zone is the email that I have out that I'm waiting for a response on from the state. So you could see here for the job tax credit, it excludes retail jobs. So that's something that's different than rural zone automatically. Rural zone allows for the creation of retail jobs in order to claim the credit. The job tax credit program does not. $3,000 job tax credit per year for 5 years for Carroll and Douglas counties. The entire state is split up into various different tiers. We're in the second to highest tier for the amount of job tax credit that can be given per year. And there's a minimum of 10 jobs that would need to be created. 100% of tax liability can go towards.
Which tax is that? Which tax is that?
That would be, oh God, I get this one mixed up with the other tax credit. I don't. It's definitely either the income tax or it's going to be the. I'm blanking now. I believe it is income tax, but there's it may be payroll tax too. I'm thinking too. It's one or the other. It's another program in here that does income tax and one does payroll tax. But I'm like 90% sure it would be income tax for this one as well. This is the other job tax credit. Quality job tax credit. Companies that create at least 50 new jobs in a 12-month period and pay wages that are at least 110% of the county average are eligible to receive a tax credit for up to $5,000 per year for up to 5 years, and that's per job per year. New quality jobs created within 7 years can qualify for the credit. Credits may be used to offset the company's state payroll. Yes, this is payroll withholding once all other tax liability has been exhausted, and may be carried forward for 10 years. New jobs that do not meet the requirements for the quality jobs tax credit can still apply for the jobs tax credit, which is the one on the previous screen. And you could see in the chart there the credit value per new quality job based on the average wage as a percentage of the county average. There's also an R&D tax credit. So it's for all R&D expenditures, technology, and the like, or the improvement of a product that can qualify for a dollar-for-dollar reduction, and federal and state income taxes owed. The Georgia R&D credit can be used to offset up to 50% of a company's Georgia income tax liability. And any excess R&D credit can be applied to the company's state payroll withholding as well. So I believe the initial one it's probably the same thing. There's a trend that's happening here, that once you exhaust one, it goes towards payroll withholdings. Companies may claim a 10% tax credit of increased R&D expenses subject to a base amount calculation, and then that calculation is the last there that's below. New Georgia companies or companies with no prior R&D experience or expenditures rather in Georgia, the base amount is 30% of the current year's Georgia's gross receipts. And your investment tax credit. The investment tax credit is available to existing manufacturing or telecommunications businesses that have operated a facility in Georgia for 3 years prior to an investment of $50,000 or more. This income tax credit ranges between 1% and 8% depending on the county's economic status. Higher credit ranges are available for investment in recycling or pollution control equipment or defense plans, which we don't have one here. Work Opportunity Tax Credit Program. So as you can see, we're getting into a lot of job tax credits now. So
Most of these are industrial tax.
so yeah, some of them will be industrial in nature, and some are, I think for our purposes and our goals here, just for downtown and DDA, a lot of these probably won't come into play. I just included them just so we can kind of see everything that Georgia in general has available, so people can kind of make the decision on their own based on their business. But this one is basically for hiring within certain target groups, and people who have had significant barriers to employment in the past. So if certain like TANF or food stamp recipients, residents of an empowerment zone or rural renewal county, which there's very few of them now left in Georgia anyway. And the tax credit is between $1,200 and $9,000 per qualified employee. Affordable housing tax credits. So the state of Georgia is very unique in the sense that it has one single application for all affordable housing tax credit programs, which puts Georgia way ahead of many, many states. There's very few that have that. So it expedites their ability to apply and get answers and feedback, which is even more important to me, feedback from the federal government and the state government simultaneously. So if someone wants to come in to downtown, they want to utilize affordable housing tax credit, they can go ahead and do that with some of these other programs. For example, the Rural Zone program does allow for housing tax credits to be used on it as well. I did find that out. Nope. One more? Okay. So there's additional Georgia tax credits too. Companies that are seeking to realize the full value of new technology investments may get a credit to offset the cost of retraining employees. So they have a retraining program as well. It gives $500 per employee that would need to be retrained, and that it would be offset from any tax liabilities. And investors in a state licensed child care facility as well, or providing or sponsoring child care for employees, may be eligible for tax credits for their expenses. And then there's even more tax credits. There's hiring for hiring individuals granted parole within 12 months of his or her date of hire, creating jobs by insurance companies liable for the premium tax, and creating more than 1,800 jobs over a 6 to 8 year period, depending on the amount of the investment. And we all know, of course, about the film, movie, and entertainment investments in the state and the tax credits that they have, and there's no cap on those tax credits. So that's kind of all I kind of had for today. But I mean, as you can probably imagine, there's the ones that are really going to come into play for us are the ones that we already administer now. In addition to rural zone, in addition to state income tax or state historic tax credits, and federal state tax credits. Some of these job tax credits and the like aren't location specific. They're able to be taken in any of their eligible counties. So it's not something that's necessarily unique to us, like, for example, the rural zone program, where there's only 23 municipalities in the state that has that. So that's a huge plus for us compared to programs that are administered throughout the entire state and for everyone.
Well, Ron, this was
Any more
more than I
questions?
ever envisioned.
I tell you, I learned so much too. But the questions about as far as what we can utilize together is still important. So I'm looking forward to getting a response back from the state and see exactly how many of these other programs can be used, because some of them do fly right in the face. All of these job tax credits, for example, fly right in the face of rural zone and their job tax credits. So I sense that they're probably going to say we can't use them with any sort of state program. They've already kind of hinted at that with the with historic tax credits, so I can only imagine any other state relief they can't utilize, but I'll wait until I get that email back.
Okay, thank you
Any
very
questions? No? Okay.
I've got a question. What does that fall under, old business or new business?
That would be new business.
All right.
That
So,
would be historic business, wouldn't it?
moving on down to number 1, discussion of benefits of remodeling downtown buildings. I believe that's Bill's.
I think that's just what we went over, right?
Okay. All right. And the historical, we already been over that then, right? All right.
Yep.
Consideration of a license agreement with Norfolk Southern and authorization of execution by the chairman.
So in last week's, I guess it was last week's city council meeting, the city council approved an additional agreement with Norfolk Southern so that we may be allowed to put the gateway sign on their property for an additional $1,080. We will be allowed to put the gateway sign on their property. So that was signed off by the mayor. I think I forwarded you guys the agreement. Nothing is free.
This is per year, I assume, huh?
Correct.
Wow.
Were we not already leasing that property since we had the sidewalk there?
Correct. That's in addition to what we're already paying.
So they are subleasing part of the property we're already leasing.
Correct. So if you guys don't have any questions about that, I will, once you guys make a motion or make a comment or approve, we'll move forward with sending this to Norfolk. We still have two more agreements that we need to secure to get the gateway signs put up.
Is that the only location that we can put that? I mean, in
That's the location that the DDA approved. When did you guys approve the gateway signs?
Long time ago.
And it's taken 3 years to get the signature.
Yeah. Okay.
So-
It is the logical place to put.
Yeah, it is.
It's the three-way stop.
Yeah.
Yeah.
It's logical, but is it the value there? But that's all I was getting at. So,
So we need a motion for that then?
Do we need a motion, Tracy?
We do,
Even though the city council approved it?
I spoke to Stacy Blackman, the DDA attorney, and she said that we would need a motion for the DDA to authorize you to execute on behalf of the DDA.
Okay, do we have a motion to approve this agreement?
So moved. I already voted on it once. I'll just do it again.
We got a motion, got a second?
I'll second it.
Motion is second, all in favor?
Thank you.
All right, moving on to number 6, public comment. Items for future agenda. Executive session. Do I have a motion to adjourn the DDA meeting?
So moved.
All right, we
Second.
got a motion. Do I have a second?
Second.
Motion second, all in favor? Okay, we need to amend the agenda for the Convention and Visitors Bureau for a request for Frontier Rodeo sponsorship. Do we need to call the meeting to order first? All right, we need to call the meeting to order first then. Getting ahead of myself. Do I have a motion to call this meeting to order? If so, has everybody taken a minute to look over the minutes from our last meeting? If so, do I hear a motion?
Make a motion to approve.
Got a motion to approve. Have a second?
I'll second.
All in favor? Now we need to amend the agenda, right?
Yes.
Okay, for a request from Frontier Rodeo for a sponsorship of $500 under old business.
Or new business.
New
What?
business.
Would that be new business?
Under new business then.
Yes.
But we need to do it before, go ahead, Tracy.
So, in speaking with Stacy Blackman, again, the DDA attorney, since what we're going to be discussing is possibly separating the DDA from the CVB, she didn't want that to occur, and thus, after that, having business that we have to conduct on expenditure, because once you do that, then you're no longer going to act as CVB board. So she suggested taking that item and putting it before those actions to consider separation in case you all do vote to go that direction.
So how about that other one? So I'll make a motion to amend the agenda to add the Frontier Rodeo and new business and move new business ahead of old business.
Second.
All right.
Okay, all in favor? So now, we'll go to financial reports.
No, I should have made a motion to move that too. Did everybody, I got to hand it out. I emailed it out, but y'all probably didn't get it. Everybody didn't get it. So here's the report for last month. Everybody just needs one page. It's front and back. Did I give you enough?
I think so.
All right. And I'll put one up here for Tracy. On the front of it, you'll see just the same as last month, looking at the tax collections that we've had from the city and the expenses that we've had. That's for January through July. And then on the back, I've looked at the tax collections over the past 4 years, 17, 18, 19, and 20, comparing the months so that we can see the impact that COVID's had. And, last month, the May collections really dropped there to like under $6,000, where it was almost $13,000 the year before. But June, which is actually the May taxes that we collect in June, actually had a little bit of a rebound. It's still less than what it's been in the prior years, but it came up quite a bit. So I don't know if we had a lot more people staying in hotels in May than we did in April. I guess they got over the COVID scare a little bit. I don't know, maybe Sharon knows why that. Do you know why the hotel occupancy went up? Oh. Do you know why your hotel occupancy would have gone up in May over April? Things just starting to pick back up? Oh, you got to step up to the mic. Sorry. Didn't mean to call you out.
So I think that it's picking up just because of people are starting to kind of get over COVID a little bit. They're picking up their weddings again. They're picking up their vacations that they had to postpone for the longest time. And we're just seeing that kind of spill over. But right now, people are putting a hold on it again because of the increased cases. So we're going to see that dwindling once more,
Okay.
which we're already starting to see.
Yeah. And just for the record, could you just state your name and who you're with so we can get it for the minutes?
Yeah, my name is Olivia Bush. I'm with the Holiday Inn Express.
All right, thanks. All right. And as you'll see, we've reduced all our expenses because we knew the income was going to be down. So we're actually in a pretty good spot right now with the reduction in expenses, but Sharon is starting to do a little more traveling now that the information centers are opening back up. We're starting to do a little more promotion than we were, so picking up a little bit more expenses, but we're still under budget, under the revised budget for now.
Any questions from Carl?
Yeah, okay.
Moving on down to new business now. Request from Frontier Rodeo for a sponsorship for $500.
Do you want to, is there, say
Somebody
anything
make a
about it, or
request,
do we just make a motion?
Any comment? No, I know we hadn't given out any sponsorship all year, have we?
I think Sharon had a comment on this.
My only comment is that we have not been giving away any money because we've been trying to hold on to what we have. Because we knew that we would be hit with the tax, lowering hotel motel taxes. So we haven't been issuing any sponsorship. We have, normally would sponsor the Golden City Cruisers, and we've already told them that we won't be able to sponsor them this year in October, and I don't think it would be fair to give money, because we literally, I took it out of the budget. I took all sponsorship out of the budget, and reduced our advertising. So we really don't have anything set aside for sponsorship anyway.
Yeah, and if you'll look at going back to the financial statement I just gave out, you'll see that this time last year, we had given out about $13,000 in sponsorships and grants. This year, we haven't given away any sponsorship money. The only grant that was for the meal that we did for first responders, to recognize first responders. So we haven't given any sponsorship money this year.
So do we have a motion?
This is one of the few things that actually pulls in a tourist. I think the Golden City Cruisers all drive here on Saturday morning and go home Saturday night. But some of these people actually spend the night around here, or maybe 2 nights even. And so that was the only reason that we really voted for the sponsorship last year, was it was a viable tourist thing.
Right, but it's, if you look, I put the mechanics of restricted spending for tourism spending so that you get an idea. One of the reasons why we have to kind of start looking at what we're spending money for sponsorship on, because it's not really falling under using the tourism tax dollars for. So we have to really start looking at that and considering what we're actually putting in sponsorship money into as well.
Yeah, I looked at that, Sharon, and we have got carnivals, arenas, amusement parks, pretty wide-ranging definition of things here on the first page that are eligible. Information centers, hunting preserves, I didn't realize it was that extensive until I looked at your
Yeah,
sheet here.
When I became the tourism coordinator even, I focused more on sales because that's what I was supposed to been doing. But I'm literally like just kind of handling all the tourism aspect of the CVB. So I'm studying more the complete running of a CVB so that we're in compliance in all areas. And that was one of the things that I'm trying to make sure that we stay in compliance with the state and everything. Because if someone made a complaint to DCA, it could really start to trickle down and affect the city as a whole, as a matter of fact, since they're the ones collecting the taxes.
Well, there's a lot of non-restricted uses here, isn't there? Proceeds can be used for any legal general fund purpose in the city, county, or consolidated government, which I wasn't aware of either. But isn't it that the motel hotel tax, 60% of it goes into the general fund, so to speak, and 40% must go to tourism? Isn't that
It's for tourism.
generally the way it works?
It's for tourism, marketing, and promoting this city as a whole, as opposed to an event. So this would be like advertising, well, an event, whatever they're using it for, I guess, advertising. I don't,
Well, haven't we done that for concerts?
as a whole, because that's a city event. If you think about, that's a city event on, and the mill falls under tourism product development because it's
Okay.
like, you know, an arena, so to speak.
Well, this is Don Rich Rodeo anyway, isn't it? I'm sure Richard Smith to put in that $500.
I'm serious. I'm sure
So
he can
Sharon-
manage that,
So in your opinion, it would not qualify because it's a private event? Is that what you're saying?
right.
Okay.
Do I hear a motion then?
I don't, if it doesn't qualify, I don't think we can.
All right, got a motion to deny. Do I have a second?
Second.
Motion and a second. All in favor?
All in favor of denying it?
Denying it, yeah. I abstain.
Might as well stay up here
Did you get-
because I'm,
Did you get the other vote up here?
got Ellen.
Okay, all right.
She voted yes or no? Oh. Okay.
5-0 and Jerry abstained.
There you go. All right, now we'll move on down to old business. Update on tourism. You still up there?
I might as well stay up here. I'll go as quickly. I got us a free listing on the Group Travel Leader website, so I've just been trying to research ways to keep us out there without having to spend a lot of money. And they threw out an offer, and so I passed it on to our hotels. I also passed it on to the museum. But it's a free listing. It's a really, you can send a nice picture and then, you know, contact and everything, so that'll work for us. I also sent all out to all of you, I don't know if you saw the email, but the Governor's Conference, which is usually the first week of September, was canceled back in April. And they initially were going to do a one-day tourism summit. However, with the surge in the virus, they have now moved that to completely virtual. So I sent it to you all if you're interested in signing up and taking part. The governor will be speaking. It's an all-day kind of, I think it ends at 3:30. But I sent it to all of you in case you wanted to take part. You know, because normally I know you wouldn't be to the governor's conference, but if you're interested, I sent that to you. And I've been doing a Facebook weekly business feature just to kind of get people downtown, get tourists to understand that our downtown is open. So I feature a business every week. I started that, I think it's 2 weeks ago. And we're renewing the billboard, the digital billboard that we have on 61, the business district. They're going to keep it, our rate at $400 for period, so might as well keep it, and we're going to do it for a year. It's been a good thing for us. It's helped us to just keep the downtown, keep the city in general, with tourists coming in. So that's what I got for y'all. And I have tonight, Olivia, you already met, from the Holiday Inn. Melissa Garrett, you all know Melissa, on court, and Debbie Hohenstein with Georgia Real Life. I always say, Real Living Georgia Life Realty. But there are some of the, there are 3 that I have asked if they were interested in being a part of the CVB if we move forward with separating, and they were very much interested in that.
Okay, consideration of CBB bylaws amendments, that's yours.
Before you leave, just a general update, Sharon, what is the present situation with the tourism office? Has it moved at all in the last few months? I don't mean physically relocated, I mean over at Butterballs.
No, there's not been any work on Butterballs. They did some grading because I think Tom sold the asphalt. Somebody wanted the asphalt, and they were going to take it for free. So that got cleaned up. And they did a little grading, you know, around the back, cut down some trees and stuff. But as far as moving in, no work yet. No, you're talking about going in
No.
Butterballs?
No, I am just talking about any movement at all
On
on
Butterballs.
on a
No, we're gonna.
new location.
We're gonna be in there for a minute, where we are.
I expect so.
But, yeah, I gave Melissa my agenda, so y'all have to keep me on point. Well,
Consideration of CBB bylaw
yes.
amendments.
So, thinking that you all may want to amend the bylaws for the CVB, I've sent you some examples. I hope you all had a chance to look over that and look over some of them and see, you know, maybe what concept you wanted to follow or whatever, and make any adjustments or anything like that.
I took a look at the ones you sent over, Sharon, and the ones, so you sent over Douglasville and Milledgeville.
And Columbus, I think.
Oh, I didn't see the Columbus one. Okay, well, of the 2 I saw, I'm sorry. Milledgeville was very detailed in their
Yeah,
bylaws.
That's what I thought too, yeah.
However, it appears that Douglasville passed, I guess the council passed an ordinance creating it, the CVB. Because you can find that those Douglasville bylaws, they don't really appear to be bylaws, they just seem to be like,
Yeah,
we're just creating
they're not
this
real
board.
bylaws,
Right,
yeah.
and I found it on Unicode, that it was within the code of ordinances for the city of Douglasville. But I didn't find anything like that for Milledgeville and their code of ordinances. So, I liked the way Douglasville organized or comprised their board, with having the city. I would just, for example, like the city of Douglasville has Samantha Rosado, and I looked her up, and she is your equivalent in the city of Douglasville. I think the only thing is, I do like the fact that it's all mayor and council appointed persons. I would like to see maybe, in addition to basically your position on there, I would like to see something, like, for example, Douglasville has 3 at-large spots. One of those is a gentleman by the name of Travis Landrum in the City Parks and Rec. I would like to see if recreation tourism is going to be a focus, then I would like to see a designated spot for that.
I've covered that. Courtney has agreed that he would like to be on the board as a representative
Right.
for Villa Rica Park, from Villa Rica Parks and Recreation.
Right, what I'm saying though is like, instead of just having that as an at-large position, have a designee from the Parks and Rec Department position kind of thing. And I don't know, and then I would just, I'm not sure having the chambers involved in our position.
Yeah,
if
I don't
it's-
think we need, because I don't think we need the chamber involved in our position.
I mean,
thought-
ideally,
I saw that too.
Ideally, I wouldn't mind having them involved, but maybe they could be at-large folks if they're interested. I just don't know. I feel like it's just, I personally would like to maybe see a little bit more, like another thing is, for example, like they have the Cultural Arts Council here. Well, we don't have anything like that, but the most comparable thing would be perhaps somebody from Pine Mountain Gold Museum. But maybe that's too narrow. Maybe you want somebody from the, quote, museum industry, and if we ever do get some other museum or attraction besides Pine Mountain Gold Museum, you know, maybe in the beginning it's somebody from over there, but maybe in a few years down the road, it could be somebody else.
I thought from the beginning, that's the only attraction we have.
Right.
So, it made sense to me to have somebody from Parks and Recreation,
Right.
somebody from, the museum,
Yeah.
which I thought Wesley, because he really gets the, you know, and then a couple of our hotels, a restaurant, and then a business owner, which is where Melissa and Debbie would come in.
Right. Yeah, and so I guess my thing is, if we're going to put this and we're creating in these designee spots, I mean, my thing is, I don't know if I would, you know, I don't know how tight we need to make these, or can we make them a little bit more ambiguous so there's more flexibility in the future? Like, so for example, even like if we're going to do a rec tourism designee, well, does that person have to be a city employee, or could it be if somebody opens up an equivalent to a Lake Point or something, and then they could be on there? I mean, you know, right now, it probably would be somebody from Parks and Rec, but 10 years in the future,
But if you looked at Milledgeville, how many times they amended.
I noticed that, yeah,
So, you know, it can always be amended,
right.
so.
And I kind of like the way Milledgeville says, you know, 3 elected by the board on, not that part, but who are associated with and represent the hotel, motel, or restaurant and hospitality industry. So basically, instead of saying we got to have 1 from the hotel, 1 from the restaurant, 1 from the, just put them all together.
Right, and I think that allows the flexibility.
Yeah. That gets the
But-
right people on there and allows
Right.
flexibility to,
But my only concern is, what if, you know, a few years down the road, you have all restaurateurs on there, and all of a sudden the hotels are cut out in the future?
I think-
I feel like there has to be some kind of boundary, like, there needs to be some, this is our intent, but, you know, you have flexibility to waiver from this if necessary. So, like, ideally, I would like to say, okay, well, we're gonna have 2 hotel members on there, but then if all of a sudden, the folks from hotels, I mean, they are interested now, but maybe they're not interested in 5 years, I would like the flexibility then to put a tourism person on there, or I don't know, if we ever get a movie theater, you know, or something, I don't know, but change it up, but kind of, you know, be able to put what we would like to see, but at least give some flexibility. That's the only thing. So I don't know, are you still working with legal counsel on creating this? Or are you looking for direction from us tonight, or?
I'm looking for direction from you all so I can go to legal counsel and talk.
And get them
Tell me
to-
what you want me to do,
Okay.
what you would like to see, and then I can relay that.
Okay.
But Tom's sitting here, so he heard everything, so.
All right.
And he remembers things way better than I. So he'll tell Macklin, I'm sure.
Well, I'll say this. I like the idea that the members be appointed by mayor and council. I mean, if they're going to be basically spending hotel motel tax that the city is collecting, then I think the city needs to have some sort of ability to govern the board or have a final say at the board. I don't
Trying
want
to
it to
say
be.
who's on the board.
Who's on the board, right. Because if they start going awry, I think the city needs to be able to reel them in through appointments and so forth. So I do like that idea.
I think the majority have been.
Yeah, it wasn't totally
appointed.
clear on the millage bill to
Millage
me.
bill.
Maybe I overlooked it.
I
but-
believe that's what I saw, and Columbus also was, if I remember correctly, was appointed by the council, I think from staff
Okay.
recommendations or whatever.
Yeah, it just says, shall be 7 voting directors and 3 non-voting ex officio directors. Okay, 1 appointed by the mayor of the city of Milledgeville, 1 appointed by the chairperson, the Baldwin County Commissioners, and 3 elected by the board. So I don't think that's mayor and council. That's, yeah. I like the Douglasville model better in that
Okay.
regard.
You want to chime in? No.
Okay. And I'm
So
just, I'm doing all the talking
cooperative
up here, so I don't know if anybody has anything else they want to talk about regarding this.
I
But,
know.
yeah,
I mean, I like the diversity idea of having people that are actually impacted by this, but also I like Matt's idea of having the control, so it's not lopsided in any kind of way as well.
yeah, my only thing is, and I know we've talked about different goals for our tourism industry or our Convention and Visitors Bureau. We've talked about recreation tourism, for example. I think this might be a time for us to really sit down and think, okay, and then kind of model the board after that, but leave some flexibility. Like, you know, it doesn't make any sense to have a recreation person on there if we're not going to pursue that kind of thing. You know, or if we say, hey, you know what, maybe like Covington had, and with the film tourism, you know, maybe we take an evaluation. I don't know if we have that enough time to do that.
Well, we've
Keep that
already,
assessment.
Wesley and I have already redone our film permitting process. So that's much easier. That's something we can ease into. But with the parks that we have, we can definitely, and we want to, and plan to go after sports tourism.
Okay.
There's no point in like having all these great parks and stuff.
Right.
I mean, it's in the future, but, you know, because there's work that needs to be done, of course. But that's been on, even when Chris Pike was here, that's been on our radar for as long. I'll be here, oh, God, the 29th, this week, I'll be here 4 years.
Right.
And that's been on our radar since then. So sports tourism has always been in the plans to try and get something going. And I think we're getting in a new parks and rec director. I think that's going to help us move
Okay.
into that.
We
Yes,
actually attempted to get something going out on Highway 61 at that facility back around 2000, and we've been trying ever since, and we've failed every attempt we made. Now, I'm using we as a city, not, we as a board
Right.
here. But so far, I have not seen any effort that bore fruit from Parks and Rec to generate any kind of a tourism thing, although that was the original selling point for that property, was to have baseball series out there and softball playoffs and so forth. So
It's not
it
going to
just never
happen
worked.
overnight, but I think we can grow it for sure.
Well, it hadn't happened overnight, for sure. You are correct. And there are so many competing facilities around that there's a big one up in Bartow County.
That's the Lake Point, yeah.
Lake Point.
I haven't seen it, but I have read about it. And
really nice.
I don't know how successful it is, but
It's very successful.
it's a hoss to compete against.
Bill,
Yeah, it's,
wasn't, I'm sorry.
No, you go.
Bill, wasn't that private back then, back in 2000, 2001? It was privately owned, the VPlex site? That's
At
my
one
right.
time, yes.
Yeah. Do y'all happen to remember what the name of it was? Because I ran across it one day on Google and I cannot find it now.
The V-Plex was?
Yeah, it was privately owned,
Correct.
something with a C. I ran across it on Google, like on an image search, and I can't find it anywhere. On an old website.
We acquired it from them.
Right.
Their idea was to have
Yeah.
all of the ball games down there, and they couldn't make it work. And as a private industry, they they couldn't make it work either.
I don't know. I can't remember. Janet, use your mic though.
Center field might have been it.
Tom is insisting. Well, my takeaway is I would like the city to have that mayor and council appointment process. And then in the beginning at least, and maybe this could just be amended at a later date, I would like to have a strong city presence on the board through the different areas of tourism that we can, mayor and council, I don't know, even a council member on there, I don't know. But I will, just at the beginning, until it kind of gets its feet, put it that way.
Center field.
Center
That's right, it was center
Does
field.
it
Thank you,
All
Tracy.
right, I'm Googling it now.
Y'all want to say anything? My team back here is like, you good, we're good. But I asked them to come, so that that you all would know that they were very much interested in working with the CVB and helping us just move on.
Yep, I found it.
Build.
Yeah, I
You
found the website. I was
center field.
It's center, and you go to, it's an old 2002 loopnet.com listing, and LoopNet does a bunch of commercial properties and stuff. And it says Playoff Sports Bar and Grill, Centerfield Sports Complex.
And I've talked with Moochie about it as well. She's she's excited about doing something like that as well. So I mean, I think for future we can get some sports. We have to start small. And I did a seminar at the governor's conference last year regarding that. I remember coming back and showing Tom the numbers, the revenue that we were missing out on. And I think one of his girls played travel ball, so he said, yeah, I know about that. It was painful. It was painful for me to see the numbers, the revenue that we were missing out on because not having sports tourism, so.
Well, that's really the only thing other than the Gold Mine Museum and downtown.
Yeah, those are three.
Those are
Those
the three.
Yep.
And what bothers me about this separation, of course, is the downtown not being heavily represented in it. And by heavily, I mean, really heavily. Our main tourist attraction downtown are our restaurants. And that's not going to change because if you think about the history of small towns, especially in the South that I'm aware of, we have got a railroad track right in the middle of it. And when I was thinking about this earlier this week, years ago, now bear with me a minute because I've got a lot of memories. Some of them get all messed up. But we had 5 mom and pop grocery stores downtown. We had 4 clothing stores downtown. We had a bank downtown. We had car dealerships downtown. We had a cotton gin. We had a feed mill. We had hosiery mills downtown because the hosiery mills had moved into what were at one time businesses, retail businesses. And then along comes the concept of a big supermarket or a bigger supermarket. Well, all 5 of the mom and pop grocery stores disappear. Later, we've got Walmart and Home Depot to come in. Our hardware stores disappeared. Now we've got Amazon, and any idea that we're going to fill up downtown with boutiques and fancy little stores, I think is a folly. It is going to have to be focused on quality restaurants and even offices downtown, which will generate traffic downtown, which would use the restaurants. We're not going to have boutiques. I have dealt with numerous people who wanted to open up a store. Most of them were young women who had good ideas and were energetic and smart as a whip, but they were undercapitalized and didn't know a thing about how to manage a business. And so they started and were gone within just a few months. And so getting businesses to occupy downtown is going to be difficult, very, very difficult. I come from a long line of trying, going back 40 years. So downtown has got to focus on a lot of, Tom calls them visitors rather than tourists, but I look at a tourist being anybody that doesn't have a 30180 zip code. Now, I will agree that the people that go into the motels and hotels around here, I love to have them, and I am all for doing all we can for them. But to think that this body can't do that with just an occasional input or a monthly input from somebody, from the motels or the restaurants. You know, we all use these restaurants. We are aware here what all of them are. The first restaurant that really took a chance on Villa Rica was Umberto. Mm-hmm. And then we had Loic and Emily Colan. And then we had Gabe. And now we've got the other side. We have some good restaurants that have worked hard to draw people, and we have helped them out probably more than they realize, because you saw some of the tax breaks up here that we helped to generate to get those things either purchased or operating. So if we're going to split, it definitely needs to be heavily focused on what we have now, with the ability to expand to what we would like to have. Not start out with what we would like to have and then take care of what we've got. You know, my philosophy has always been that persistence and a plan is what's important. And sometimes it takes years for that plan to finally work its way through. 30 years ago, half of Villa Rica was empty, literally empty. And we started working on it slowly, recruiting people, encouraging people. Some of us spent our own resources on it, but it has been a slow go. It's just like eating an elephant. You know, you eat it one bite at a time. But it seemed like over the last 30 years, every time we had a change in city administration, we got a new zookeeper, and they ran in a new elephant on us. So you just can't start eating a bigger elephant every 4 or 5 years. It takes 30 years to do it. So all I'm saying is that if we split, we need to focus on initially what we've got, with the ability to bring in what we would like.
And we do. I mean, my marketing is for what we have now. I think when I started here, Uncork was just the wine boutique. I think with the growth in the tourism that we have had, that helped them to move forward into having a restaurant. And we didn't even have the Holiday Inn. So I think we're still focusing on what we have now, but we still also have to look toward the future and keep moving, because every year just try to grow. I don't want to stay the same, you know, all the time. I always want to grow, even professionally. And I like to see, I've seen so much growth in this city since I've been here. In 2016, when I started, there are a lot of stuff in here now that wasn't there at all. I mean, and I remember driving up and thinking, ooh, what am I going to sell? Because I didn't think I had anything to sell. But we just kept chugging along, and things kept growing. The city kept growing, and business kept growing, and people kept coming. And I think the more people keep coming, the more growth we're going to see. I think a vibrant downtown includes restaurants and boutiques. And all of the downtowns that I've seen, they got restaurants. They got a lot more restaurants, but some boutiques as well. So, I mean, that's just a whole part of people coming in, tourists coming to your downtown. They want to see, they want to walk. They want to walk, and they want to shop, and they want to eat. So
And they want to park.
And they want to park. They definitely want to park.
Yep.
Yeah, but, okay.
All right.
Any more comments?
I was going to ask, is your plan to take our information that we discussed today and work on something substantive for us to vote on, or?
I talk, we meet every week with Tom, so.
Okay.
Well,
Yeah, I think we'll have to come up with some kind of bylaws, some kind of structure of how it should be, you know, the type of members that are on it, that we could vote on to,
Right.
because I definitely agree that, I mean, we need lodging, restaurant, retail, all that. I like the way that Douglasville does that, the different types of businesses that they have. And I'm looking at us here on this board, nothing against us, but we're not any of those things. Retail. We got the one retail here.
Retail.
Yeah.
historic retail
And then an attorney and a lawyer and
and account.
Bill, who just knows everything. So, because he's been here so long, so we've got the history.
I've also got interest,
Downtown.
Oh, yeah, and he's got, I'm not,
quite a bit.
yeah, from the owning property in downtown and such too, but I think we need that, some kind of bylaws that show what the makeup should be. And then we can start putting people in those places.
So you want the attorney to give you a guideline? The city attorney to kind of give y'all some guidance on the makeup?
Well, we need, I think we just need something presented that would be the bylaws, the beginning of the bylaws for the CVB, so that we could
Okay.
vote on it.
Proposal to vote
Okay.
on, I think, and to review
Yeah.
and vote on.
Yeah.
Okay.
I mean, we can't just vote on, hey, let's split them up without knowing what we're splitting into.
Exactly.
And I guess the other thing is, I forgot to ask about this earlier, but is our current CVB a 501c6?
It is, isn't it, Carl? Mm-hmm.
It is, okay.
It is. Yeah,
So,
because it had to be. We
Yeah,
set it
that's
up that
right.
way because it had
Okay.
to be a CVB.
and then, do we need a council resolution if we're going to follow the Douglasville model where I guess they put it in their ordinance? I don't know. I mean, and that could be a legal thing for council, is to let us know they feel is the most appropriate way to organize it.
Okay.
If it's already an independent body at a 501c6.
Yeah.
Well, it has to be structured as a
It has-
501c6.
yeah.
Right, but
That's-
then so do we need like the Milledgeville did not have, there was nothing in the Milledgeville ordinances that referred to it. But Douglasville's ordinance basically has an ordinance that created it, but it didn't appear they had any bylaws. I
I've
don't,
got a question.
Ellen has a question.
No, we forgot
Hey,
Ellen
Ellen.
was there.
Ask whoever to ask the question so I can
Yeah, which, did you? Are you muted? You may have yourself muted.
Are you muted, Ellen? Are you muted?
No.
She's got herself muted.
Now she should be.
well, your volume turned all the way down.
Yeah, where's
Got
the,
it. I'm trying to turn it up.
turn up the volume on the laptop?
Okay.
Okay.
Okay, you try. We still can't hear you. I still can't hear you.
Let me, I'll tell her to chat the question. Who has another question while we're doing this? Somebody else have a question?
I have a suggestion. My suggestion would be that you guys vote to split effective January 1. And my suspicion is that that's the only decision you're going to make, and that everything else is going to be made by the mayor and council. That's my gut feeling sitting here listening to it. So the bylaws and all that stuff, I think, are going to be put together by them if I had to venture a guess. And then that way y'all could continue to function for several months, and then we could get whatever in place, and then the council would appoint a new group effective January 1. So that's my suggestion.
Is she typing?
No.
Janet's calling you, Ellen.
I think Tom may have just answered the question.
Yes, ma'am, I'm sorry, we're having, for some reason, the audio's not working on the side, so go ahead with your question.
Put the mic up there.
Example bylaws, now we're asking for official bylaws, so it just seems like a lot of work for her that's unnecessary even before the vote, because for me, it just feels like that's a lot of work to find in bylaws for something that she has no idea. You know, she brought example bylaws and she wants to pattern it after. So is there any way that we can make some sort of a decision that gives more time, that allows us to help finalize the bylaws? Because it sounds like we're on the right track, and it just feels like an unnecessary amount of work for her to go through, to jump hoops, you know, if she already did what she asked. And it sounds like everybody is in favor of the bylaws that she wants to pattern after. So I don't know if there's a middle ground that, you know, we can go through, or a delay in time before it goes into effect, before it's separated. But if we're going to be an incubator to help this, we need to make a stand, I believe, either for it or to say yes if we can get the bylaws in place by 3 months. Yeah, I don't know what that is, but it just feels like I don't want to keep stringing along each month by saying, well, now, okay, you brought example bylaws. Now bring, you know, more summary bylaws. Now bring another summary bylaw. And that could go on for 2 years. So I just feel like, you know, if we're going to make a switch, we need to make a vote to either do it or not do it. And then limbo in between. That's just me. I mean, I don't know. That's just where I was coming from.
And I think that goes right along with what Tom was saying. We just need to make a decision to do it as of a certain date, like the 1/1, January 1st, and then let whoever's going to develop the new bylaws get working on them. But we've already made the decision that we're going to split. And then the city council is going to have a lot of say in who goes on that board. So I make a motion that we split CVB off of DDA into its own separate board as of 1/1/2020. 1/1/2021. Sorry, I'm doing taxes for 2019 still. So as of 1/1/2021, with the city developing the bylaws and the board makeup to go into effect on that date.
All right, got a motion. Do we have a second?
Oh.
Ellen seconded. All in favor? All opposed?
Okay.
I wasn't really sure
You
if
get
I
the
should
vote?
abstain
You
or
get the
not
vote?
in that vote, but I guess we'll figure it out.
All right,
That's it.
that's it.
All right.
All right, move on down number 5, new business.
We already did new business. Remember? We
Okay,
moved
that's
it up.
right. All right, we done that one. All right, public comment. Item for each agenda. Executive session. Hear a motion to adjourn?
Move that we adjourn.
Second.
Tracy, maybe you'll get home before dark. I hear you, me too.